Ladies and gentlemen, good day and welcome to PG INVIT earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from ICICI Securities. Thank you and over to you, sir.
Thank you, Yusuf. Good morning. On behalf of ICICI Securities, we welcome you all to Q2 FY2024 earnings call of PG INVIT. We are pleased to host the management today. We have with us Shri Abhay Chaudhary, Chairman, Shri Purushottam Agarwal, Director, Shri Sanjay Sharma, Chief Executive Officer, Shri Amit Garg, Chief Financial Officer, and Anjana Mitra, Company Secretary and Compliance Officer. We'll start with brief opening remarks followed by Q&A. Over to you, sir.
Good morning, everyone. On behalf of Powergrid Transmission Limited, the investment manager to PG INVIT, I would like to express my appreciation to all the participants for taking the time to join this call from the busy schedule. I have with me Mr. Purushottam Agarwal, Director PUTL, Mr. Sanjay Sharma, CEO PUTL, and Mr. Amit Garg, CFO PUTL, and other senior officials. On Wednesday, November 8, 2023, PG INVIT announced its financial results for the quarter and half year ended September 30, 2023, along with the details of distribution for the quarter. These results are available on the respective websites of BSE and NSE and also on our website. A presentation on the Q2 and H1 FY2024 results of PG INVIT has been uploaded on our website, and in the interest of time, I will provide a concise overview of the results. For the benefit of our new investors, I would like to introduce the trust. PG INVIT is an infrastructure investment trust with Powergrid Corporation of India Limited, a Maharatna CPSC, and India's largest power transmission utility as its sponsor and the project manager. Powergrid Transmission Limited is its investment manager and IDBI Trusteeship Services is the trustee. The trust investor base has been expanding consistently and has grown from about 15,000 unit holders at the time of IPO to more than 1.23 lakh unit holders as on 30th September 23. We express our gratitude to our diverse investors for their trust and confidence in PG INVIT. Currently, PG INVIT owns 5 power transmission SPVs with 100% equity shareholding in one SPV and 74% in each of the other 4 SPVs. These SPVs are operational and revenue-generating projects consisting of 11 transmission lines spanning approximately 3,699 circuit kilometers at 3 substations with a transformation capacity of 6,630 MVA. The transmission service agreements associated with these projects have an average remaining life of over 29 years. The assets have a strong history of operational performance with an assurance of a 35-year contract period under TBCB mechanism without regulatory uncertainty and backing of Powergrid as its sponsor and project manager, and the advantage of availability-based tariffs providing high visibility on cash flows and very low leverage and a sector witnessing sustained investments. Harnessing these attributes, PG INVIT is committed to delivering value to its unit holders. PG INVIT aims to provide consistent, stable and visible returns to its unit holders. Now I will address the distribution for Q2 FY24. A distribution of rupees 3 per unit was announced on November 8, 2023 for the quarter ended September 30, 2023. This is the second distribution by the trust for the fiscal 24 and ninth consecutive one since our listing. The distribution will be made to unit holders on or before November 23 to 2023. Including the distribution announced for Q2 FY24, PG INVIT has declared an aggregate distribution of rupees 28.50 per unit since its listing, which amounts to distributing over rupees 25.93 billion. As previously announced, we aim to achieve a distribution of rupees 12 per unit for fiscal year 24. Our quarterly distribution aligns with our distribution policy and SEBI INVIT regulations, guaranteeing that no less than 90% of net distributable cash flows is distributed to unit holders. In accordance with our distribution policy, distributions will be declared and made at least once every quarter. Now coming to the highlights for the quarter ended September 30, 2023. On the operations front, employing latest technologies and with thrust on safety, our project manager ensured safe, accident-free and efficient operation and maintenance of the transmission assets throughout the quarter. The average availability of the SPVs exceeded the target availability, reinforcing high performance and reliability. The average availability during Q2 FY24 has surpassed 99.75% in each SPV, resulting in maximum possible incentive. The data for Q2 FY24 is currently provisional, pending the receipt of monthly availability certificates from the respective RPCs for most of the SPVs during the period from July 23 to September 23. It is pertinent to mention that these certificates are issued periodically by the respective regional power committees, Ministry of Power, Government of India. As you are aware, one of our SPVs, PKATL, is currently executing a project under the regulated tariff mechanism. The project, titled Implementation of 400 kV 125 MVAR bus reactor at Kalam substation, was allotted to PKATL by the Ministry of Power, Government of India, and I received a transmission license from CERC. The work is under advanced stage and the project is anticipated to be commissioned in FY2023-24. Now coming to the financial highlights. During the Q2 of FY2023-24, the total income on a consolidated basis was about rupees 3,256.27 million, which included rupees 3,181.71 million of revenue from operations and rupees 74.56 million of other income. The other income is mainly on account of interest of deposits. Total expenses, excluding impairment for the Q2 of FY2023-24 at the consolidated level, stood at about rupees 1112.37 million, that is 1,112.37 million. During the first half of the financial year 23-24, total income on a consolidated basis was about rupees 6,466.93 million, which included rupees 6,318.91 million of revenue from operations and rupees 148.02 million of other income. Total expenses, excluding impairment for the H1 of financial year 2024 at the consolidated level, stood at about rupees 2,302.38 million. The NDCF calculated at the SPV level have been included in the consolidated financial results. The trust receives cash flows from the SPVs in the form of interest income, dividend income, and repayment of SPV debt. As per the INVIT regulations and the trust distribution policy, over 90% of the NDCF of the SPVs has been upstreamed to PG INVIT by September 30, 2023. The NDCF of PG INVIT for the quarter ended September 30, 2023 works out to rupees 2,735.74 million. The distribution of rupees 3 per unit announced for the quarter comprises of interest component of rupees 1.97, taxable dividend component of rupees 0.34, exempt dividend component of rupees 0.21, repayment of SPV debt of rupees 0.47, and treasury income of rupees 0.01. The total distribution amount works out to more than stipulated requirement of distributing at least 90% of the NDCF at PG INVIT level as per INVIT regulations and our distribution policy. As on September 30th, 2023, PG INVIT had an outstanding external borrowing of rupees 5,712.68 million. This is against the rupees 5,755.85 million raised from HVDC Bank to part finance the acquisitions in March 22. The loan is a floating rate loan linked to 3-month T-bill. Average cost of debt for H1 FY24 was 8.18%. The spread on the loan has been brought down by 33 basis points in July 23, which is in addition to 34 basis points reduction in January 23, leading to savings on interest costs. Net debt as a percentage of AUM as on September 30, 2023 works out to about 1.22%, which provides significant headroom for funding future acquisitions entirely through debt. The trust continues to enjoy the highest credit ratings, AAA, with stable outlook from all the 3 rating agencies, namely ICRA Limited, CRISIL Ratings, and CARE Ratings. Billed trade receivables as on September 30, 2023 stood at rupees 1928.30 million, equivalent to 56 days of billing. On the acquisition of the balance 26% equity shareholding, during the quarter, 2 more SPVs, namely PWTL and PPTL, completed 5 years since the date of commercial operation. With this, all the 4 SPVs except PJTL have completed 5 years since the date of commercial operation. PJTL shall be completing the same in January 24. During FY2024, PG INVIT intends to acquire the remaining 26% stake in these 4 SPVs. Considering that it would be a consultative process with the selling shareholder and various activities involved, we envisage concluding the acquisition process towards the end of the financial year. Lastly, coming to the outlook part, our growth is envisaged through acquisitions of operational power transmission assets in accordance with INVIT regulations and statutory requirements and unit holders' interests. While we do remain fully committed to the interest of unit holders, limited availability of assets available for acquisition at present has always been highlighted by us. As of now, operational power transmission assets that may be available for monetization by the developers are quite limited. However, with significant investments expected to flow into the sector in the coming years, and many projects being taken up for bidding under the TBCB route, we believe that once these projects get commissioned, they should create opportunities for investment vehicles such as PG INVIT looking for revenue-generating assets. Considering that around 42, comprising of 20 of Powergrid and 22 non-power projects under ISTS, which are presently under construction, we expect a good pipeline of acquisition opportunities to be available after 1 to 2 years after the commissioning. We are also keeping a watch on the development status of ongoing projects, although very few in numbers, to keep track of opportunities emerging in the near term. Further, if some states decide to undertake monetization of their operational transmission assets to raise capital, it too would provide a new opportunity. This, though, is expected to move rather slowly and would require significant policy advocacy with the states. By virtue of having significant headroom for acquisition of new assets through debt, competitive strengths, and being a ready investment vehicle with a large pool of institutional and non-institutional investors, we believe PG INVIT would stand to benefit in various upcoming transactions in the sector. We want to emphasize that all assets being considered for acquisition will undergo a thorough evaluation process comprising their operational history, compliance with INVIT regulations and statutory requirements, adherence to trust corporate governance framework, interest of our unit holders to determine their suitability for inclusion in PG INVIT. Now, as far as the guidance, as mentioned previously, we would like to maintain that our distribution guidance of rupees 12 per unit for financial year 23-24 still stands. Thank you, and now I would like to hand over to the moderator for further proceedings. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
Hello.
Yes, Mr. Nikhil, you're audible. Please go ahead.
Thank you, sir. Thanks for the opportunity. So, in the opening remarks, you mentioned there are around 44 projects which are under construction, but they will be coming up after some time. So, can we assume that there won't be any significant asset addition in the next 12 to 18 months?
Yeah, in the next 12 to 18 months, what we have seen from Powergrid earnings call, that they will be, once all the 4 assets complete the 5 years of Powergrid, so they will be considering the further selling their assets. But for the other ISTS assets, only a few of the ISTS assets will be completing their 1 year after commissioning in the next 12 to 18 months. So they have to first commission the projects, complete the initial period of 1 year, then only 74% or whatever as per the regulation they can transfer. So the next 12 to 18 months there will be, I think, very few in the pipeline.
So is it fair to assume, sir, next year our distribution will definitely be lower than 12 rupees, or do we have sufficient cash to keep it at?
I mean, that call I think we will take when we address the earning call for the end of this financial year. So it's a bit early now to take this call.
Okay. So just to find, how much is the cash as of today on the books?
Yeah, CFO can.
Actually, it is 471 crores. Out of that, 273 crores is for making the distribution announced for Q2.
Right,
so
right.
Effectively, it will be approximately 198 odd crores.
Okay, understood. So I've got a few followers, but I'll get back in. Thank you.
Okay, thank you.
Thank you. Next question is from the line of Sagar Tanna from Alchemy Ventures. Please proceed.
Sir, you mentioned that we would look to acquire the balance 26% in these 4 projects. Any ballpark number in terms of how much outflow will be required for funding those projects, and how do we intend to fund them?
See, that will be a strategic question. I mean, we don't want to, because that will depend on the valuation that time. And that will again be on the, what is the market forces and what are the rates that time. So it will be a bit early to divulge this right now.
Funding through debt.
And this will be basically funding will be through debt. That is definitely, we have a large headroom there.
Sure. So, sir, with the acquisition of these 26% in these 4 projects, will we be able to maintain DPU at the same rate or in absolute terms next year?
See, again, it will be a bit early now, but we'll be taking the call at the end of the, when we have an earning call by May. We'll let you know that time even the acquisition of the valuation of the balance 26%, and that time we will calculate and let you know.
Sure.
I'll ask the CFO may further add to this.
Yeah, Sagarji, just to add to what the chairman sir was mentioning, that if you see the distribution breakup for this quarter, I mean, only 34 paisa was against the taxable dividend, which was from these 4 companies in which 26% stake is still to be acquired. So, as was mentioned on your funding part, that majorly it is envisaged to be funded through debt. So obviously the trust will be gaining probably this 34 pies which we paid to Powergrid against the which we paid, as the taxable dividend for the 74% stake. So corresponding 26% stake will trust be getting as the additional dividend. But to service that dividend, obviously trust will be taking the loan, and the requisite servicing of that additional loan will consummate a major chunk of this distribution. So net on net, do not foresee or, a major increase in DPU per se.
So what would be the cost of debt, sir?
So currently, the average cost of debt is 8.18, as was mentioned in the chairman's speech. So obviously, what will be the cost of debt at the time of acquisitions will be factored in while valuing, and then obviously the valuation, the price at which the valuation is happening will ultimately yield to, whatever plus or minus can be there. So roughly, as of now, it is somewhere around 8.13.
So assuming, sir, the cost of debt remains same and not goes down, right? We will still make a positive spread, isn't it?
Obviously, it depends upon ultimately depends upon the deal price. Obviously, yeah.
Fair point. Got it. Thank you, sir.
Thank you.
Thank you. Next question is from the line of Vinod from BOB Capital Markets Limited. Please go ahead.
Yeah, hi. Am I audible?
Yeah, please go ahead.
Thank you very much, sir. Sir, Powergrid has been mentioning that incrementally in the last year or so, they have been doing more of securitization and less of InvIT. First, I would like to understand why is securitization better than InvIT, and second is, would that mean there won't be further asset addition from Powergrid per se?
See, this is a question to be asked to Powergrid, not to PG InVIT. And Powergrid, being a PSU, has to go by the policy of the Government of India. So, why securitization and why not InVIT is a question I think that people may have asked in their earnings call. So, I think we should not make comment on that.
So, incrementally, say the pipeline of assets for us would be non-Powergrid assets for the next couple of years at least?
No, see, it depends on the policy as such. The first Powergrid assets will be these 4 SPVs of 26%.
Correct.
And then whatever Powergrid assets are there, if there is a slight change in the policy and the Government of India permits, then definitely Powergrid assets also. Otherwise, as of now, we are looking at all the options, Powergrid as well as non-Powergrid.
Okay. Okay. I just want to understand why Powergrid is doing securitization rather than, transferring it to the InvIT. So
I mean, it's better.
Any opinion on that? I mean, I don't want a specific answer, but any opinion why it's...
Maybe, yeah, please.
I think it has been elaborately explained in Powergrid's analyst call, and you can just go through the analyst call, and there the the recent one also you'll get the details around that. We would not like to comment on what the seller wants to say on as far as what strategy they are following.
Okay. Thank you.
Thank you. Next question is from the line of Bhupendra Meel from Deutsche Bank. Please go ahead.
Hi, sir. Thanks for the update. I have 2 questions. One more as an update or clarification, to be honest. You mentioned that the debt cost is 8.18, and you also mentioned that you have been able to cut down the cost by 33 basis points. Would it be fair to assume that incremental costs at this point of time would be closer to 785?
So Bhupendra, actually, presently PG InvIT has only one loan on its books, which is from a commercial bank, and that loan is linked to a 3-month T-bill. So if you look at the movement in the 3-month T-bill, the cooling off is still to take place. So 7.85 is not something which will be possible on a T-bill linked loan per se as of now. That is what we feel. But there are other options available to us. Actually, this loan if you see, has a door-to-door maturity of 16 odd years, and almost 50% is back-ended. So obviously, all these parameters do influence the cost of the debt, and we have to take all the things into consideration while deciding upon which source of fund to go for, and obviously whether to go for a loan or a bond. So closer to the transaction, we will be evaluating the market scenario and then taking a call whether the NCDs are cheaper or whether a MCLR linked loan is cheaper or T-bill linked loan is going to be more beneficial. But for the current loan, obviously 7.85 is not feasible.
Understood, sir. The second question is a follow-up to the previous question which Sagar had put up. This is regarding the acquisition of the remaining 4 SPVs, remaining set to take 26%. So in your half-yearly report and also in the Concall, you guided that you are envisaging concluding these acquisitions within this financial year. And what we understand is out of the 4 SPVs, 3 SPVs have already completed their lock-in periods, in July 23. And you also infer that it will be a, consultative process and may take time. So my question is that consultation process not yet started with Powergrid?
It would start upon the completion of the balance fifth asset, which will be completing its 5 years on 31st of December 2023.
Understood. And would it be fair to assume that it could be a accretive acquisition from an investor standpoint, sir? Because the cost of debt would be closer to 8%. Would it be fair to assume that it will result in some kind of accretive distribution to investors?
I think with respect to Sagar's query, our CFO Amit very elaborately explained this question, and he mentioned that as long as some positive spread is available to us, it would give you some value accretive, but again, looking at the very small amount of DPU contribution of dividend to this entire dividend profile, this would not be a very significant uptick for the unit holders.
Understood. Thank you.
Thank you.
Thank you. Next question is from the line of Danish Mistry from Investor First Advisors. Please go ahead.
Hello. Good afternoon, and thank you for taking the time out to talk to us. I had 2 questions. The first is that, sir, how confident are we of sustaining cash flows from specific SPVs like BTL, PPTL, PWTL, and PJTL for the next, let's say, 2 or 3 years, maybe up to FY26 or FY27? That's question number 1, sir.
The cash flows are already defined in a TBCB. For the next 35 years, the cash flows are defined. It is not a regulatory assets where every 4 years these are changing as an RTM. So there will be definitive cash flows, and we know what are the cash flows. They are aware as per that is availability, and that is in the evaluation report that is already available, and above that we are, because of the highest availability these are being maintained, we are getting the incentive over that. So it is already very clear that there will be a positive tariff coming out of all these assets.
Understood, sir. Understood. No, thank you, sir. Because I was referring to the valuation report only, so it's good to know that that we are comfortable with those estimates.
Yes.
So yes, sir. So second question is that, sir, in the absence of any new asset additions, which can take time, in the interim, are we taking any steps to control trust level expenses? Essentially, that would result in more cash flow, which can be paid out to the unit holders via the NDCF, sir.
So Danishji, if you happen to read our financials, the expenses are already on a very, very low side. And you may compare it with any other trust. We will not be commenting, but the expenses at the trust level are very, very minimal.
And the revenues are the maximum possible. Because after maintaining 99.75 plus percentage, that is the maximum incentive what we can get.
Got it, sir. And sir, last one, if you may allow me, sir. September 22, we saw a large impairment, and this time, sir, in September 23, we have seen some reversal of an impairment which is there. So, if you can help us understand, sir, what has happened, and can we expect more reversals of that large impairment that happened in 2022, sir?
So Mr. Danish, actually, this impairment or reversal of impairment, this is in accordance with the Indian accounting standards, Ind AS per se. So how it works out is that, we get the valuation done every 6 months as mandated under the INVIT regulation.
Correct.
And this valuation is obviously nothing but the discounting of the future cash flows by a certain WACC. Now this WACC in per se may undergo a certain change, or the cash flows per se may undergo a certain change. Mm-hmm. So cash flows are more or less, constant per se as per the estimate. It is only the WACC which is fluctuating. So last September 22, there was a huge rise in the, the global interest rate markets per se, which resulted into the higher WACC and corresponding reduction in the valuation.
Correct.
Now, we have started to see some kind of reversal on two fronts. One is the, a bit of cooling off in the interest rate, though not substantial. But what is happening is that, the risk premium which the country used to face has reduced comparatively, because there has been quite a turmoil in the US markets and other world markets. So the Indian equity risk premium has reduced to some extent, which has led to the reduction in the cost of equity per se. So correspondingly, there has been a reduction in the weighted average cost of capital, and which has been captured in the valuation report. But having said that, kindly note that this impairment or reversal, it is totally a non-cash item per se. It is not going to affect your cash flows.
Yes, sir. I agree, sir. No, I was just seeing the results. I was quite, pleasantly surprised to see that, that something has been reversed. So that was the only question, sir. That's it from my end, sir. And, best of luck for the coming quarters ahead, sir. Thank you very much, sir. Thank you.
Thank you.
Next question is from the line of Pradeep, who is an individual investor. Please go ahead.
Thank you, sir. Congrats on the results. Just two questions, sir. First question basically is that now we are planning to start the negotiation with Powergrid by December. So the question is, will we still be on track to complete it before this financial year, given the fact that the negotiations are going to take long?
You can time 3 months is more than enough, but it will be more dependent on the global financial factors basically, so that it is a win-win situation for both Powergrid and the PG INVIT. So time, it is only the valuation time, and then we have to talk to Powergrid. So time is not a problem as such.
Yeah, as of now, if we start the discussions in December, I think we can, if things move at a faster pace, they can very well be concluded in this financial year. And that is what we are targeting and we are envisaging. But as things will unfold, we'll only come to know later.
Got it, sir. Sir, second question is, if Powergrid is going via the securitization route and not via the INVIT route, then will we be looking more aggressively towards non-Powergrid assets to increase our growth potential?
Yes, you can say so.
Okay. Got it, sir. These are my questions.
Thank you.
Next question is from the line of Vipul Kumar Shah from Sumangal Investment. Please proceed.
Hi, sir. Thanks for the opportunity. Just confirming, what will be the cash left over after paying the distribution for this quarter, sir?
198 crore as on 30th of September.
And second is, what is the tenure of the loan which we have taken, which is at 8.18%?
To do it is 16 years.
Sorry?
16 years.
16 years starting from March 22.
16 years. Oh, okay. So because if you compare our interest rate with one of your peers, they are paying around 50 basis points less.
So, sir, Vipulji, it depends upon the kind of loan that you have taken. I mean, the markets have really climbed in the last, say, 1.5 odd years. And, we expect the interest rates not to remain that high for, infinity. So, obviously, a floating rate loan can cut you both ways. So, our loan was on the floating rate basis because it was a very, very small loan per se compared to our book size. So going forward, when there will be mix of, floating aspects, the rate on an average basis is bound to come down. The point you are referring to, kindly not fair for us to comment upon, but that has been into the business much prior than we were, wherein the loans were cheaper at that point in time. So obviously the fixed rates loans will, tend to pull down the overall interest cost.
I'll also add one thing, that you are seeing the present rates, Mr. Vipul, but if you just look at the average cost of debt for last financial year, it was 7.2%. So, as Amit rightly mentioned, once it is a floating rate loan, you get the benefits of it also.
So, hypothetically, if RBI cuts by 50 basis points, we will get the entire 50 basis point reduction, or it doesn't work like that way?
I didn't get you. Can you come back again, sir?
If RBI reduces that.
No. Suppose if RBI cuts rates by 50 basis points, so we'll get the proportionate reduction in our rate, or formula doesn't work like that?
Probably you are referring to reduction of RBI, you are mentioning the repo.
Yeah.
So our loan is not linked to repo, it is linked to T-months, 3 months T-bill. But generally what happens is that if there is an overall reduction scenario in the economy per se, then generally T-bill also aligns along with the market scenario. So if the RBI is reducing by say 50, obviously the market, there is some macroeconomic level change which has led to this kind of reduction. So market is going to capture it, and a few basis points here and there will be surely be an impact on the T-bill also, and corresponding impact on the interest cost of the trust also.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. Next question is from the line of Keshav Vianney from SBS. Please go ahead.
Hello, good morning, sir. Can you hear me?
Yeah, good morning.
Sir, congratulations for the good results. Sir, I have 2 questions in mind. I'm new to this product, so I just wanted to understand what is redemption premium SPV debt, redemption of SPV debt, the 47 paisa which is distributed.
So Keshavji, actually, the trust has lent out some money to the SPVs.
Okay.
So as loan. So
okay.
when these SPVs repay that loan back to InvIT, it acts as an cash. It is a cash flow to InvIT, and that cash flow on account of this repayment of loan by SPVs to InvIT, we distribute to the unit holders. So this is basically what the repayment of SPV level debt is.
Okay, thank you so much, sir. And just one more question: in the 5 components of our distribution, which according to you would going forward, there is a chance that could come down, or that would be at this level?
So, interest is a contractual level obligation. So, obviously, the rate of interest is same as of now. But if the loan outstanding reduces in the books of the SPVs, there will be corresponding impact on the interest amount per se, right? Okay. And obviously, the dividend is dependent upon the profitability and the opening reserves, whatever the reserves and whatever the profitability is. So, if you happen to go through the valuation report, when the revenue is making a dip, there will be corresponding reduction in the profitability, and obviously, then there has to be reduction in the dividend payouts also.
Okay. The dividend, both taxable and exempt, both dividends would be affected going forward.
Yes. If the profitability decreases, this exempt or non-exempt is, just, what kind of tax regime the SPVs have chosen to be in. So, obviously, the basic fundamental, the profitability remains as it is.
Okay. Thank you so much, sir.
Thank you. Next question is from the line of Asim Nerula, an individual investor. Please go ahead.
Hi, can you hear me?
Yeah.
So my question is that if I remember correctly, for the previous quarter in June, you had to dip, I guess, 12 to 13 crores in cash to make the DPU. So for this DPU payment of only for this quarter, per unit, how much have you got to dip into the cash?
So, Cindy, I think you need to take the consolidated view on the dip in the opening reserves. So, if you see, when we started the InVIT in May 21, we had the opening cash of 216 odd crores. So, currently the cash position is 471 crores, and if you reduce 273 crores to be capped against this quarter distribution, then the closing cash will be 198 odd crores. So from 216, we have landed up to 198 crores, reducing how much? 17-18 odd crores. So, and be mindful also of the fact that out of this 17-18 odd crores of reduction in cash, about 10 crores of this rupees have been utilized for funding the RTM project of PKTL. So, all in all, since the inception of the InVIT until 30th of September, only 7.5-8 odd crores have been, eaten away. Because this, it's a function of cash flow, is a function of debtor position also, which happens to improve by the end of the financial year. So instead of comparing it on the quarter-to-quarter basis, it will be useful that if we take a holistic view. So all in all, we distributed how much? More than 2,500 odd crores since inception. And if eating away the 7-8 odd crores during that period is not amount much to be, to make any substantial difference per se.
All right, I get you. Thank you so much.
Thank you. Next question is from the line of Rakesh Kumar from KRC Advisors. Please proceed.
Good morning, sirs. Can you hear me?
Yeah, good morning.
So, congratulations on a good operating performance. And thank you also for the speech. I really love the words mentioned in the speech relating to certainty, visibility, and I think I would add one there saying disclosures. My questions relate to these topics only. I have two questions. The first is relating to the point you made about certainty of cash flows, and this is actually what we look forward to when we invest in an InVIT, long-term investments with certain outlook. But if you look at the price of the InVIT, it's quite volatile. In fact, the volatility of PG InVIT units has been more than the index itself. You have also shared the InVIT index in one of your publications. So the PG InVIT volatility beta is much more than the index. And considering that this is more like an annuity, do you have some kind of feedback on why PG InVIT is so much more volatile?
So, I think as far as the price movement is concerned, the trust can only vouch for its performance. The price is a factor of market forces. We have been giving a guidance and we have been sticking to it. Our performance has been, on the operational side, the performance has been at the benchmark best levels. So, we would not be able to comment on the pricing part. As far as certainty of, when you said cash flows, I would like to say the transmission service agreements that these SPVs have, they have a very clear certainty of revenue profile over the 35-year contract period. So that is what Chairman Sir was referring when he was mentioning about the certainty of revenues.
No, that's true. And I appreciate it's not an easy question to answer. And my question is not relating the unit price itself. It's about the relative movement, the movement of PG InVIT units vis-a-vis what's happening with the other InVITs. So the volatility seems to be much, much more in the case of PG InVIT. And that's why, this question arises as to why PG InVIT is so much more volatile. Of course, all of these InVITs are subject to market forces. All of these are subject to interest rates in the economy. you don't figure out why PG InVIT is more volatile, we'll let it be. My second question is regarding, visibility. See, cash flows. You have about 27%. Sorry?
Yeah, please continue. Please continue. Okay.
Can I continue? Okay.
Yeah, sure.
So, see, around 27% of investors in PG InVIT are retail investors. There is not much of analyst coverage really to go by, unlike in the case of other investments like equity, for example. So we rely entirely on the disclosures which are made by PG InVIT. Now, in terms of cash flows, there are two things which I wasn't able to gather very easily. The first is, how is the operating performance? Let's talk only about distributable cash flows. Okay. So how has the performance with respect to distributable cash flows been till now, vis-a-vis what was mentioned in the IM? I think in the IM it was up to 24. This is something that we are not able to get very easily. And the second is about future cash flows. Here again, the only thing we can go by is the valuation report, which shows future cash flows for each asset separately on a standalone basis and not on a consolidated basis for the InVIT itself. So, do you think it's permissible and easy for you to also disclose the consolidated cash flow statement, which can allow us to take a reasonable call on whether to make more investments or not? Right now, you're disclosing it in a piecemeal manner. So, is this something that you can do for your retail investors?
Yes. So, Rakesh, actually, whatever is mandated as per the regulation, be it InVIT regulation or be it any other regulation, we are making the requisite disclosures per se. And since we are publishing our financials on quarterly basis as well, wherein the investors get a fair idea as to what are the expenses and revenue at the standalone InVIT level. So we expect that, the investors obviously can, the more complicated part of it, the cash flows at the SPV level are already captured in the valuation report. And the minuscule part, which is on the standalone trust level, has to be, projected upon by the respective investor, and call has to be taken accordingly. Because this is something which is not mandated by any regulation. So presently, what is required as per any regulation, we are making the requisite disclosures. So that is one part of the story, and the other part was the comparison vis-a-vis what was given in the IM and what we are actually getting. So, you can make a comparison. We feel that for the limited period, what was given in the IM, the performance has been on the similar path.
Sure, thank you. So, just following up on the future cash flow part, see, I really appreciate the fact that all disclosures are being made at least at the minimum level which is mandated, regulated. But we need not stick to what is the bare minimum required to be disclosed. If you look at your peers, they do disclose much more than this. They also disclose expected DPU for the next 10 years. And this is a business which is an annuity business. You have long-term concessions, the cash flows are clear, and you are disclosing them via the valuation report maybe. My only suggestion is, since more than a quarter of your investors are retail investors, and you are not covered by any, there are no analyst reports in the public space. So if retail investors have to come in more numbers or have to look at increasing their exposure, you would be helping them by making them understand in a much more easier manner the consolidated picture. Eventually, the unit price is linked to the consolidated cash flows. Why should he have to look at each of the SPVs separately, add it up, maybe make some mistakes? So, I agree that you are doing the bare minimum. My request is, can you do a little more, which is not very difficult and which will not be against any disclosure norms?
Okay, we'll certainly look at your suggestion, and maybe if you wanted to have a consolidation of all the SPVs, then we'll look at it and see to it that we come out in the near future.
Sure, thank you so much. There was one suggestion last time about transcripts.
Mr. Rakesh, may we please request you to rejoin the queue as several participants are
Okay,
waiting for their
sure. Thank you.
Thank you. Next, we have our next follow-up question from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead. Mr. Nikhil, your line is unmuted. Please proceed.
Yeah, I'm audible?
Yes, you are.
Yes.
So one of the private competitors has also tied up with the EPC constructor to develop the assets and later they will transfer it to themselves. So are we looking at some of these arrangements in the long term?
Nikhil, as we mentioned, we are looking at all the options and we are keeping the options open. And yes, we are also keeping a track of what is happening in the sector.
Okay. And sir, any concrete plans on getting into renewable assets?
No, I think we have touched upon this in the past as well. As of now, we are focused on power transmission assets, and we believe that the strength of power transmission is something that is, and the strength of the project manager, the asset maintenance, and the regulatory framework around the power transmission asset is very suitable for us, and we, in the near term, we continue to stick with that.
Okay, sure. Those were my questions, and thank you.
Thank you. Next question is from the line of Bhavesh Doshi from Dalal & Broacha. Please go ahead.
Thank you, sir, for giving the opportunity, and I think congratulations on a good set of numbers. My one question is, which I was looking to your individual cash flows for all the 5 projects which we have undergone. So from March 27 onward, that is from the financial year 27-28 onward, there is a substantial reduction is happening in the revenue side. Okay. So could you throw some light on that, and in the context of that, what could be our even our payout policy will be there at the time?
Yes, the assets.
The Parli project and Jabalpur and Warok transmission line. Okay.
Yes, Mr. Bhavesh, these revenue profiles are very much defined as per the TSA, and as you are mentioning, they are there is a dip post FY27.
Yeah.
So definitely, if there are no asset additions, the distributions and the returns, the cash flows would be impacted, and the only way to keep them up is look for acquisition, which we are doing.
And what could be the impact? Because I think most of them, I think there are 30% drop in the revenue, which is happening, 27-28% drop is going to happen. So do you see the proportionate drop in our distribution also will happen accordingly if the no new takeover has happened, suppose, for example?
Yeah, I think it's not only about top line, it's also about the expenses that are going to have an impact at that point of time. So we would not hazard a guess as of now, like what would be the numbers look out, because this would be too much looking into the future. But yes, the distribution would definitely be impacted if no new assets are added.
Okay, fine. Thank you, sir. Thanks, sir.
Thank you.
Thank you. Next question is from the line of Varan Kumar from Darashaw. Please go ahead.
Hi. So, you just spoke about this inorganic growth opportunities, and PG INVIT is open for acquiring, what you can say, other companies. And my question here is, are they open to purchase cash flows from other companies if they are not purchasing, what you can say, entire company?
Please repeat the question. Are we going for what purchase?
Are you open to purchase cash flows from other companies?
Cash flows from other companies?
Yeah.
No, I don't think so. PG, we are a trust. So whatever within the ambit of the INVIT regulations will be going by that.
But we can.
Can you elaborate on your query actually?
Yeah, I mean, this is something new. Varunji, can you elaborate?
Where are you coming from here?
In case the target company is not, what you can say, if you are not able to acquire the target company, at least if you can purchase cash flows, in the sense, what I can say, investing in another company, basically like fund of funds.
So Varunji, actually we are regulated by the INVIT regulation.
As per the INVIT regulation, we can't invest entire money in this investment. So investment is limited to 10% of your enterprise value. So it is a limited room available as per the INVIT regulation. Sure, we can do it, but in a very limited percentage.
Okay. Got it. Yeah, thank you.
Thank you. Next question is from the line of Mansi S., an individual investor. Please go ahead.
Hello, sir. Good morning. So just wanted to get a sense on what is the reason for decline in the top line on the revenue from operations that we see on a year-on-year basis.
So this is primarily due to the reduction in the tariffs of the SPVs. Actually, two out of SPVs, Vizag and Kalam, there is a reduction in tariff as per the transmission service agreement. So there has been a corresponding reduction in the top line due to that.
Okay, and so as touched upon earlier, the major reduction that we foresee in the top line would be in in March 27, right? Not before that.
So for that, you can refer to our valuation report. From 27-28, there will be substantial dip. So if you go through our valuation report, your query will be answered that which SPV is dipping when, as far as the top line is concerned, year on year.
Okay, fair enough, sir. And so last point that I wanted to just get a sense on, what is the additional amount of cost that we need to incur towards the under construction substation at the Ambala line?
RTM, or total investment amount.
So as per the investment approval, it is roughly 42 odd crores. So, and it has to be funded in the ratio of 70-30, 70-30 equity, as per the CRC regulation. So this is the investment approval amount, but obviously the actual amount will be known once we complete the project. Yeah.
So as on today, what has been the equity already infused and what is the equity that is pending to be infused? So as I understand, the equity pending to be infused would be taken from this existing 198 crores of cash balance, right?
So Mansi, actually we will be accruing cash going forward also. No? So this 198 crore was the cash available as at the 30th of September. There is constantly revenue generation happening in all these 5 SPVs. So we will be funding it accordingly.
Okay, sir. Just to get a number, out of 42 crores of total project cost, how much has been incurred so far and how much is yet to be incurred?
I think till September the 30th, it was 10 odd crore rupees. And there has been some other expenditures post 30th of September. So till 30th of September, it was 10 crores, which was funded in the ratio of 70-30.
Okay, sir. That's all from my side. Thank you.
Thank you.
Thank you. We will take our last question from the line of Akshay Kothari, who is an individual investor. Please go ahead.
Yeah, thanks for the opportunity, sir. While a lot of questions have been asked on business and valuation side, I would like to ask more on the management front. So first of all, the sponsor owns around 15% of the INVIT, right?
Right. Yes.
So who is the decision maker regarding appointment of CEO, CFO and CS?
We have a committee in place, for a committee of directors in place which decides all these appointments. And the recruitment of CS and CFO is done through this proper process, the transparent process through Powergrid Corporation. And so far as the CEOs and there is no CEO as such, there is a MDs in these companies. And
Is she talking about the SPVs or the PUTs? Are you talking about the investment manager or the SPVs of PG INVIT, that is Vizag, Kalam?
No, I'm talking about the PG INVIT structure as a whole. Who is responsible for the INVIT?
So responsibility lies with the investment manager as per the regulation, which happens to be PUTL, Powergrid INVIT Transmission Limited. Under this PG INVIT, which is managed by PUTL, we have 5 operating SPVs or the 5 operating companies. The board of these 5 companies are, the directors on the board of these 5 companies is appointed by the board of the investment manager.
Okay, understood. So lastly, I have last 2 questions. One is, so do the CEO, CFO, CS also hold in units of the INVIT? Because I could not find it.
None of them.
You can find this in our half-yearly and annual report also. We give a statement to...
Okay, so you don't own any of the INVIT units?
Yes.
Okay, sir. Okay, sir. That's it from my side. Thanks.
Thank you so much.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to the management for the closing comments.
Thank you very much, Mr. Mohit and your team, and also a heartfelt thanks to all the participants for joining us on this call. We genuinely value your active involvement in PG INVIT's earnings calls, and we eagerly anticipate continued interaction with our investors through these calls. At PG INVIT, we remain committed to providing consistent, stable, and visible returns to our valued unit holders. Once again, we express our deep gratitude and anticipate your ongoing support and confidence in PG INVIT. Thank you once again.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.